Insurance rates have gone crazy. You're starting to see car insurance go up and up. And we just made a video, I'll link it at the end here, that talks about how 2022, it went up 16%. 2023, it went up another 16%. But according to this actual Consumers Affairs report, they're actually a larger increase than what we're thinking. They're looking closer to 30+%. And let's dive in to go over which companies have had the largest rate increases, which might be a reason to avoid going to that one to save time. By the way, I'll skip to in this article, which I actually agree with this in this scenario. In a lot of my videos, I talk about don't just shop around to shop around, because that's what the essential reasoning for all these articles are for. They want your information, they want to sell it to other companies, and you'll get 100 phone calls, right? So that's essentially the point of these. The shopping around in this case makes a lot of sense, because if you're going up 30% and if you're paying more than 200 plus a month for one or two cars for the right coverages, it always matters depending on what state and location and all of that. But if you are paying that much, it makes sense to shop around. If you are in that situation to where you're ready to check, I'll put a link in the description below where you can work with an independent agent where they shop multiple companies without having to do 500 phone calls. You're going to get one agent, they're going to shop it with all these companies, they're going to bring you the best options and let you decide what's the best fit for you. This is no surprise. They said one of the largest increases was Allstate, and they went up 30% in 2023. That's across the board, and I agree with that. That was something they announced early on in 2022, was that we're raising rates. We can't afford these prices and these states, and in some states they went up 40+%. I have a video on that. But we got to remember that even though they announced it, it doesn't make it feel any less worse. I have used Allstate in the past, and they've been a great company, but the rates just can't sustain that with what's competitive compared to the product that they sell. They had a double-digit increase in California, which they actually just turned on that state back. So now they'll do commercial and I believe auto policies there. One of the reasons they stopped doing insurance there is because it was just impossible. California wouldn't let them raise the rate to a certain point, and they just couldn't make any profit. They were literally just paying out money to where they were supposed to bring in money. It just didn't make financial sense. They got a double-digit rate increase where the state has allowed them to raise the increase massively, and because of that, they're going back into the state to sell the insurance. It's crazy because you see the other models, like Geico, for example, they're known as the cheap brand or the inexpensive and the teenagers type company. And they've only raised almost 12 to 13%, which is probably half of what Allstate's raising. They're making profit in the states like California to where they aren't covering as much, but they're also not charging as much. There's an ebb and flow there that just works for them. So what are these factors that are causing these rate increases? It can't just be that they want to make more money, although that's what we all think. It's like, they just want more money. I'll link a video at the end that the State Farm just lost over $14 billion in 2023. That's crazy. The biggest thing that we're seeing is actually not car insurance, it's actually home insurance, is that the catastrophic claims and the cost of materials for repairs. So between those two things, there's a lot larger of a cost. It's not just inflation, that's a small piece of it. The homes are worth more, the value is higher, so the replacement cost of a piece of wood is a lot more. But them getting knocked over and blown off and the hurricanes coming through and tornadoes coming through is probably 20 to 30% larger than it has been ever. So that increase of natural disasters are causing a lot more claims than expected. The other issue is for cars specifically, we have bought more cars in the last 2 years than we have in years and years past. So newer, nicer cars, safer, but when the natural disasters hit, you can't control that part of it. For those of you that are feeling the pain, you have driven perfectly. You've followed some of my videos and you're like, Mark, I did everything you said. I'm a perfect driver, I have great credit, I went with the right company, they're giving me cash back, they're getting this mileage discount, I did this telematics, which gave me $600 off, I did all the things, right? But my rate still went up. And the only thing I have to say to that, unfortunately, you're not gonna like it, is imagine what it would have been without that, because that hasn't changed. That's not a gimmick. Those are things that insurance companies are giving to customers, claims-free renewals, longevity discounts. Those parts are beneficial, but unfortunately right now it's just to combat the rate increase. That means that they're having a 20 to 30% increase. You're just not feeling it as heavy because you are a good driver in those scenarios. I know we just said Allstate had a 30% increase across the board, but Farmers actually had a larger increase. According to the S&P Global Market Intelligence, they've hiked up over 34.7% during 2022 and 2023. It's sad to say this, but the lower one was Progressive. They were only a 22.8, and I say only, it still hurts, but it was a 22.8% increase. Compared to the other large companies, the Progressive one has not gone up a ton. The little strategic thing that Progressive has done is they've slowly increased it, where your Farmers and your State Farms and your Liberty Mutuals and all those guys, they just did a massive whack, like bam, here's 30%. Suck it up. Sorry, love you. Where I can't figure out for the life of me how to turn off Progressive's notification because I'm so tired of seeing it. Oh, we went up 2%. Oh, we went up 12%. Hey, we went up 8%. They've slowly increased it to try to nudge it to where it doesn't affect you directly as much unless it has to. So if they don't have to raise the rate, they're not going to. That's the benefit that Progressive has given to where, yeah, they ultimately have gone up 22%, but it really only feels like 10. So what can you do to fight back? There's not a whole lot that's left. They just have to get into their profit margin. And unfortunately, we're kind of at an everywhere board where one company's here, another one's here, another one's here, another one's here. And eventually, probably in 2024, near the end, and probably the early 2025, we're gonna see these rates start to all just level off. The ones that are down here are gonna raise up to be level with the ones that are more expensive. So you've got all these companies in different places. Who's the best fit for you? That's where those independent agents come into play. That's why I put that link in the description below to where you can work with one person that does work with 5 or 6 or 7 different companies. So they can look at the one that's high, and if that's the fit, then great. But if there's one that has similar coverages and has a good reputation that is 20, 30% cheaper, right now, even if I can get that for the next 1.5 to 2 years, I'm gonna take that. So you can get into that, and then when the prices start to vary and change, maybe the rates do go up, but now they're equal to the company that's better than them. I'd rather be with the better company if I'm gonna pay the same price. So you've got all those options available. The other things that you can do is look at your existing policy. I have a video that goes into depth on how to get the best deal on your renewals in your current agent. If you're looking for discounts and just trying to shop around and find out where you can cut some costs, I'll put a video here that goes over in depth with that as well. I'm Mark with Think Insurance. I'll see you in the next one.